Good evening, everyone. On behalf of Edelweiss and Edelweiss Mutual Fund and Asset Management Company, I welcome you. This time, we also come with an event that I think is very topical to the times, and that is about investing in IPOs. The sign of topicality and popularity of this theme is that I think we've got a record turnout for the event. So that tells you how much buzz there is about the IPO market. We are probably sitting in the middle of a time where 3, 4 IPOs are lined up. But I think over the last 3, 4 years, IPO investing has really gathered momentum in the Indian context. I won't steal the thunder from the speakers, but there are many reasons for that. A large number of companies that private equity had invested in are coming up for exit, and the IPO route is proving to be a very popular one. Many of these companies are also new economy companies. They are very different from the traditional kind of companies that you see in the benchmark, whether they represent a sector like diagnostics, retail, exchanges, or even the industry that I and all of us come from, which is asset management companies. There are 4 asset management companies listed today. So there is a large number of issues coming to market, and that pipeline is expected to continue. At the same time, I think IPO investing is a little misunderstood. When we think about IPO investing, it's almost like throwing darts. Buy any issue on listing day gain, do some funding or फिर देखा जाएगा. We at Edelweiss believe that IPO investing is significantly more nuanced than that. And IPO investing is a space that we have looked at very closely in many capacities as Edelweiss, including in our funds, in our alternative investment funds, etc. And we don't think IPO investing is a passive strategy. There are many issues as far as IPO investing is concerned, whether it is getting access to the right opportunities, selecting the right opportunities, or exiting them at the right time. This is something that requires specialization. This is something that requires thought. And it's in that context that we decided to have this event today. I think the first part will cover IPO investing and the whole IPO theme, because before you invest in any opportunity or any fund, it's very important to understand the space. And I think we have a speaker who understands the space in all its richness. So very exciting evening ahead, and look forward to all your questions after the discussion. I'm sure it's going to be a very rich discussion. With that, what I'm going to do is hand the conversation over to, again, a familiar face for all of you, Deepak Jain, who's our head of retail and institutional sales. He's going to be your host and host for today, grilling the experts through the day. Have a great day, guys.
Thank you so much, Radhika. This is the part that I really love, where I get to grill the fund managers and the expert rather than answering on their behalf to the audience. I get to be the guy who will grill them, who will ask them tough questions, and they will answer it throughout the session. So as Radhika rightly put it, that this fund was launched in 2018 to identify opportunities via the IPO market, also to provide you opportunities which is otherwise not available in the Indian mutual fund space by investing in new age businesses, so on and so forth. As she mentioned, opportunities in the IPO segment, the challenges, we'll try and break some myths, we'll try and get some insights from somebody who has done it, who has done the pre-IPO kind of investments, who have done alternate kind of investments, both in IPO and the secondary market, who understand this space as better than anybody else in the Edelweiss system. So let me introduce to you Nalin Moniz, our head of alternatives, our CIO alternatives, to this show I think for the first time in the digital format. Nalin has been a regular on our Connect on the road, where we visit various cities, and he has provided a lot of insights about his fund. For the first time, we have called him to provide an insight about an exciting opportunity and also give us answer some questions at the end of the day. Welcome, Nalin. This Connect is about Edelweiss recently listed IPO fund, but we also want to know from you a lot about this space as a whole. So please share with us your insights and answer questions that any of our participants may have. My first question to you, Nalin, is a lot of people have seen IPO markets over the years going through various phases, and it comes and goes. What do you really think of the current flurry of IPOs coming to Indian market? Is it cyclical? Do you think there is a structural opportunity, or how would you like to really take this opportunity and explain this opportunity to our participants?
Great. Good evening, Deepak. Thank you for that warm introduction, and welcome to all of our participants on this webinar. I have never been more excited about the IPO opportunity as I am today. And for a simple reason that this is a chance, this is an opportunity to buy great companies early. Companies that are typically underrepresented in mutual fund and investor portfolios. And this idea, Deepak, is very much structural in nature. Let me illustrate that with a few great examples and case studies. For one, over the last 4 to 5 years, almost 1.5 to 2 lakh crores per year has gone into startups and venture capital investments. And now companies are growing so rapidly that the only avenue left is the listed markets. I want to share one interesting story with you, Deepak. India has 39 unlisted unicorns today. In the first generation, when you had companies like Just Dial and Naukri, it took them 15 years to become a unicorn or to have $1 billion valuation. Then in the second generation, when you had companies like Flipkart, Snapdeal and others, it took them about 8 years. The third generation companies like Dream11 Gaming or Nykaa, which many of you are familiar with, have taken about 5 years to become unicorns. And now that cycle is compressing even more with companies like Ola Electric and others, which have taken only 2 to 3 years to reach $1 billion valuation. So with this acceleration of growth, the IPO market will remain buoyant for a very long time. That's not just the only trend driving IPOs. We see increasingly large business groups coming to the IPO market to list businesses. And I want to give you one example there as well, which is the Aditya Birla Group. They listed Aditya Birla Fashion about 5 years ago, then Aditya Birla Capital about 3 years ago, and they've recently filed to launch their own mutual fund in the public domain in this year. Thirdly, the IPO market is going to be very strong because of the need for PSU divestment, Deepak. Today, we stand with the fiscal deficit at 9.3%. And if the government wants to keep taxes low and they want to keep interest rates low and borrowings low, the only way for them is to come forward with divestments of companies like LIC and other star PSUs. So we look forward to that as well. And the common theme among all of these structural trends is that you are getting new age businesses, you're getting capital light businesses, and you are getting fast growing businesses that can start off as maybe mid and small caps, but become the large caps of the future. So that's why I'm so excited in a nutshell.
Nalin, what is the need for these companies to come to IPO? We also know that a lot of these companies are driven by PE exits, some of these IPOs. How do you look at PE exits, whether you look at PE exits as an opportunity or with some bit of cynicism?
Deepak, great question. I look at it as an opportunity. Typically, a private equity firm will help a promoter put in processes, put in a second layer of management, put in high governance. And in an IPO, they don't often sell their entire stake. They may sell 30 to 40% of their stake. So they're continuing to remain invested with you even after the company goes public. And hence, because they have skin in the game, I think it's very much an opportunity to partner with them.
Interesting point that you make, Nalin. Also, with regards to IPOs, we know that companies want to come list themselves, raise money to be able to use that money for future growth. Are you seeing enough businesses in India actually needing that capital for growth, or do you see that as just as a bull market phenomenon where people want to exit?
No, companies do need to grow, Deepak. And, in the last 2 to 3 years, companies have delevered balance sheets. But now as we come out of the lockdown and COVID recedes slowly in the rear view mirror, companies are excited to get back to an investment cycle into a CapEx cycle. And for that, they need to raise money. I'll give you one very simple example, which is Nirma Cement. This was a company that went private about 10 years ago, but they're now coming for an IPO today because they are growing so fast in East India. Their brand name is Nuvoco Vistas. So there are many such examples like this that highlight this trend.
Fantastic, Nalin. You mentioned something about IPOs being representative of new age businesses. How would you like to elaborate further on this point? When we look at the sectors in the EMOF, we see technology, telecom, healthcare, financial services, industrials. It doesn't give us a complete picture whether they are new age or traditional businesses. How would you like to explain to our participants what exactly you mean by new age businesses?
Right. So there is one way to understand it, Deepak, by looking at just financial statements. These are businesses that are growing faster in underpenetrated markets with a higher return on equity. But I think when I explain it to you with examples, it will really strike home. So your portfolio may have Infosys today, but an IPO portfolio will have a Nazara Technologies or a Dream 11 Gaming, which makes mobile games. Your portfolio may have a Bharti Airtel in the telecom sector, but it won't have a Root Mobile or an Affle in the telecom VAS space. Your portfolio may have a Sun Pharma or Lupin, which are large cap pharma businesses, but it won't have new age businesses in diagnostics like Dr. Lal Path Labs or Metropolis. Your portfolio may have HDFC Bank, Bajaj Finance, Kotak Bank, which have 18 to 20% ROEs, but it doesn't have a AMC like HDFC AMC or RNT like CAMS or even a stock exchange like NSE, which are generating 30 to 50% ROEs and growing much faster. Your portfolio may have an L&T, but it won't have a exciting electronic manufacturing company like Dixon or Amber. And your portfolio may have a Hindustan Unilever, but today a lot of shopping, a lot of consumer spending is happening in new age brands like a Nykaa or other such B2C businesses. So that's, when you talk about these examples, it really comes alive that IPO investing is the investing of the future.
So thanks, Nalin, for making this, very, very important point about differences in companies, the nature of the business that they operate in, yet being clubbed in a broader sector. So looking deep into the portfolio and what they do is the real game here. I would also like to ask you a pertinent question with regards to this new age companies. Since many of these businesses are first among many to be listed in future, how do you really evaluate and how the peer set gets set for these companies? Is it still work in progress, or do we have some method to the madness?
Right. I think the techniques are the same, Deepak. You obviously have to be a lot more diligent because these are new sectors. They may not have peer groups, and you're maybe meeting management for the very first time. But I found that it's actually easier to research IPOs than to research existing listed businesses. And there are two reasons for that. The first is that all companies have to file what is called a draft red herring prospectus. This is a 400-page document which has all of the risk factors, an overview of the industry, or an overview of the business, audited financials. It is the most honest research report you will ever read on a stock. And the second is that its management and promoters are a lot more open to you visiting their plant, talking about their metrics and talking about their growth plans in an IPO. So it's different, but in some ways it's also easier to invest in IPOs.
So Nalin, this is really enlightening. It's good thing that we are providing opportunity and access to people to get into these new age businesses. But in your assessment, have these new age businesses actually done better than traditional, or for that matter, the sector that they represent?
Absolutely, Deepak. And I think when you think of investing in equities, you are always investing in the future, and no fund or no idea represents that better than the IPO segment of the market. Over the last, not just the last 6 months and the last year that you see on your screen, but actually over the last 3 to 5 years, new age IPO businesses have outperformed their old age existing listed counterparts. And that's consistent with the idea that India is evolving, India is emerging. We are becoming the pharma capital of the world. We are already the tech capital of the world. And you have many, many other mega trends like the financialization of savings or consumption of the middle class that are providing tailwinds for newly listed businesses.
Thanks, Nalin. We also would like to understand, most of these IPOs are in the small and mid cap domain. Do they really make it big in terms of market cap and profits and actually be counted in the larger mid caps and the large caps domain? Do we have some history? Can you throw some light on it?
Absolutely, Deepak. And if you allow me, I'll just share, a personal story, from one of the funds that I manage. And that is of Dr. Lal Path Labs. This was the first diagnostics company that went public in 2015 December. There were no listed peers, and it was very much a sunrise sector. But since that period, in the last 5.5 years, the business has grown from a small cap company to a frontline mid cap. It is now even in the F&O universe, and at some point it will become hopefully a large cap stock. And there are so many other examples of businesses that have emerged from the IPO segment to take their rightful places in the benchmark indices. And I think that is the real exciting thing about this idea.
Thanks a lot, Nalin. Let me just, for the benefit of the audience, I put up a slide where we have shown that how many of these small caps and mid caps have moved to become large caps, and small caps have become mid caps, so on and so forth. We've also highlighted in the yellow boxes how some of these companies haven't really done well. Some of them have also got suspended. So it's not all hunky-dory. It's important to pick the right and winning horse and not necessarily get trapped into buying into every company that can be injurious too.
Thank you for highlighting that. And I think that emphasizes what Radhika said at the beginning of this call, which is that this is not a passive strategy. This is a strategy that requires a lot of diligence, a lot of on the ground research, and a very careful eye on corporate governance and management, because you don't want to make mistakes and be in those yellow boxes.
So before we let you go, Nalin, we would like to know about the upcoming IPOs. We can't really let you go before that. Everybody wants to know about the big daddy LIC. Everybody wants to know about some of the recent names that have been doing the rounds. Of course, you can only talk about them in your capacity as an expert who might have looked at the DRHP that you have made very, very clear is the biggest research document that one could ever access. So based on that, would you like to share some ideas which are interesting and upcoming?
Right. So there are so many new age businesses, Deepak. And you've put up a great list here, and maybe I'll just pick a couple that are interesting. And I don't know what valuation they will come at. So I give that caveat that this is not an investment recommendation. But if you look at Zomato, that's something that all of us use. All of us have it installed on our phone. And food delivery has really taken off in a big way after COVID, because you have not been able to go to restaurants. So that is a bellwether IPO from the e-commerce space. You have Birla AMC, which is in a sunrise business. You have a really fantastic API manufacturer in Glenmark Life Sciences. You also have some very niche but specialized chemical businesses, which are run by super promoters. So whether it is Clean Science and Technology or Tatva Chintan, Pharma and Chemicals. And also we have some issues that have closed this week, like Sona BLW, which makes auto components for electric vehicles. So many such businesses. Of course, NSE, LIC and others will also come, but these are just businesses that have filed to go public.
Thanks a lot, Nalin, for your time in sharing your thoughts about IPO market, the opportunities ahead. We will now take questions from the audience, which has come our way. An interesting question, and many of us may have this question. Nalin, how does a retail investor increase his chance of getting allotment? Many of them have applied in last 2 years and have actually nothing to show for it. Would you like to explain the criteria that is being used currently for allotment to retail investors?
Right, Deepak. So, you bowled me a googly upfront itself. So the retail category is 2 lakh rupees per PAN card, but they allot one lot or about 15,000 rupees first to everybody. And then if there is anything left over, they give it to everybody else. So most retail investors are putting in an application of 15,000 rupees per PAN card. If you're a family of 4, then maybe you will do a 60,000 rupee application across 4 PAN cards. And it's your lottery how much allotment you get. The simple answer on how to get more allotment is participate in Bharat's fund, and all your problems will be taken care of. And then you can go back to watching cricket and not bowling googlies to me.
Thanks a lot. The second question is about valuation concern that people seems to be having of late. In good old era of early 90s, perhaps, IPO was a good way for retail investors to participate into equity market, invest into companies at a fair and perhaps a cheaper price. But the current belief seems to be that a large part of gain is already priced in when the IPO comes for subscription. What do you have to say about that?
Right. So there are three phases in the history of the IPO markets, Deepak. In the 1970s and in the 1980s, you had the Capital Control Commission that pushed a lot of MNCs like a Colgate and Hindustan Unilever to actually go for an IPO at par value. Those were no-brainers. Those were absolute no-brainers. And it actually wasn't fair to those businesses. Then prior to 2011, there was a period when investors were really getting squeezed. But in 2011, SEBI has cleaned up the merchant banking regulations, and they introduced things like a institutional category. They introduced things like an anchor investment, and they brought a bigger role for mutual funds, insurance companies, FIIs, and other institutional investors to play in the IPO process. And these institutional investors have ensured that there is always money on the table. And that has also given retail investors confidence. Now, not every IPO may make money, but on average, there is money on the table and retail investors can certainly feel confident.
Thanks a lot, Nalin. And again, I will try and bowl a flipper perhaps, but not a googly this time. What's your take on this entire pre-IPO investing? You have been part of investment committee of two of the pre-IPO funds that Edelweiss launched and managed successfully. So we are talking about NSE being very active in the pre-IPO private market. Also, this entire nuance about moving from being a private company to a public company. If you could just talk a little bit about that.
Deepak, the test match between India and New Zealand has been washed out today, but you're still bowling googlies and flippers at me. I'll just share a perspective on pre-IPO investing. And I think it has a key element of risk, which is you don't know when this company will go public. And hence, it makes it tricky in a mutual fund setting. Most funds invested in NSE in 2017. We are now midway through 2021, and we are still waiting for a DRHP to be filed. Now, the business is doing very well. Earnings have doubled in that period, but it still is yet to come for IPO. And by the way, Deepak, the same has taken place in other companies. RBL Bank people took pre-IPO positions in RBL Bank that lasted 7 years. Same with AU Finance. The same is happening with HDB Financials. So it is a key risk. And these are big, really well-reputed marquee names. Once you go one level down into maybe the second rung of businesses, the risks only manifest a lot more. So I think that it is better to stick to the pure listed space where also the market has spoken to some extent on the valuation and the business quality.
Thanks a lot. Let me take you to something which Radhika always talks about. Her wedding coinciding with an IPO, which perhaps nobody remembers. So January 2008 is when Nalin, you and Radhika got married, and there were two IPOs. One was a real bumper in terms of euphoria, etc., and it really tanked on the bourses. Whereas the other one, which was a fantastic company, not too many people excited about that business at that point in time, and have really become the multi-bagger. So from your experience point of view, what has been your experience in hype? Let me just be Srinivasan Jain for a moment. Truth versus hype.
Great question, Deepak. And the company that was really hyped in January of 2008 was Reliance Power. Nobody was interested in my FERAs. People were only interested in how much allocation they were getting. But, I think if I had gotten married 2 weeks later, it would have been just the reverse. The second story is a story of a small textile company that went public in 2007, undersubscribed IPO. It actually listed 20% below the offer price. And there was a chance to buy this as much as you want of this small cap business. Today, that business has grown 100x and is a large cap company. Of course, I'm talking about Page Industries, which everybody knows makes the jockey brand. So I think the point in both these stories of Reliance Power and Page Industries is important to do your own research, to do your on the ground diligence, and be with a trusted fund manager so that you can truly find the diamonds in the rough and avoid the mistakes.
So pick the right jockey, so to say.
What's that?
Pick the right jockey, so to say.
Pick the right jockey. Yes.
So thanks a lot, everyone, for participating.